Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. Happy Friday. In this episode of Robinhood Top Stocks, we're going to be finishing the week off with a retail stock. And today we're going to be talking about JCPenney, ticker symbol JCP. And so JCPenney is a company that I only remember when I go to malls, really. It's something that, unless I see an ad for them on TV, I'd never just think to myself, you know what, I need clothes, I'm going to go to JCPenney. But today they were in the news because they had worse than expected losses for the holiday shopping season. And so I thought it'd be a good time to talk about this because there's a lot of things that have happened to this stock over the past 10 years that make it a very interesting story. And I think it's very interesting to talk about considering I own another struggling retailer in Macys. And so I'm going to kind of compare the two and explain why I like the long-term potential of Macys and why I don't feel the same way about JCPenney. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. So currently JCPenney is sitting just above $1, and it's down almost between 10 and 11% so far today. And that was based off the news that they had worse than expected sales numbers from the holiday season. And Macys had a similar thing as well. So Macys also had news about their sales over the holidays come out yesterday. And when I woke up, I was kind of surprised to see that Macys was up 5% in early morning trading. However, that has since fallen as they've announced that they're starting to close some stores. And so there's a lot of things to look at with these stocks. When you're looking at a company that's been hit like 80% in the past couple years down from their previous highs, there's a lot of problems going along with it. When I look at a lot of these companies that I think about potentially taking a position in, you have to look at stuff just beyond the fundamentals and just kind of the overall feeling with the company. And so one of the main reasons that I like Macys over JCPenney is the fact that online space with Amazon and now Walmart being major factors there is the fact that the luxury products or the higher end products are still sold in stores pretty well. And so when you compare JCPenney and Macys based off the products that they sell, I really like the fact that Macys sells higher end things that you're less likely to be buying online, because if you're going to buy something expensive, you're probably going to want to try it on first and be able to shop for a bunch of different sizes and colors. And so that's kind of the main reason why I feel better about Macys over JCPenney, in addition to the fact that I think the name recognition of Macys is stronger than JCPenney. JCPenney has been around for over 100 years, but since about 2000, the company has really struggled. And so at this point, there have been so many retail stores that have gone out of business or have delisted from the New York Stock Exchange. And so JCPenney in August actually got a delisting notice, which means they did not meet the criteria on the New York Stock Exchange to stay listed. And so the main reason why that happened is one of the rules is that over a 30-day period, the stock's closing price has to stay, or the average closing price has to stay above $1. And around August, that did not happen. And so when that happens, they have 60 days to either reverse stock split to artificially inflate the price or organically increase the price. And so in August, they had some earnings that were better than expected, and it pushed them above the $1 threshold. So at this point, they're safe. However, when you're hanging around $1, $1.10, you're pretty close to falling below that threshold. So that's something I'd be kind of worried about. One of the other recent examples of delisting notices came with Chesapeake Energy, which is actually one of my more popular videos on this channel. And so Chesapeake Energy has struggled for a long time as well, and they have also fallen below that $1 threshold, and so they're at risk of delisting. And so when you're comparing these companies, you have to see how their fundamentals are doing overall, because obviously there can be some news that pushes things down, but obviously the fundamentals have to do a lot. And when you look at the industry of just department stores overall, you see a lot of pain over the past decade. While there's a lot of pain, there are also some really bright spots. So I talked about Macys has struggled recently, but stuff like Target and TJ Maxx, ticker symbol TJX, has done really well in the past couple years. And stuff like Walmart has been able to survive in a retail space that has been starting to be dominated by online sales with Amazon. And so the problem that JCPenney has is that their online presence isn't very high, and they're getting outcompeted on the discount end by stuff like Walmart and Target. And so when you're comparing companies in a space that's not doing well already, you're going to want to take the leader in that industry. And so JCPenney is definitely not that. A lot of the fundamentals are telling me to get away from this stock. Stuff like increasing long-term debt, they haven't been positive in a couple years, and just the fact that retail as a whole has been struggling. And so a lot of times I can look at these companies that have been struggling and pick something out that I really like about them. With Macys, the really attractive part was the almost 10% dividend. JCPenney does not give a dividend, so that doesn't even give me that easy way to point out something and be like, oh yeah, I really like that with the company. On this channel, I talk a lot about buying companies that have been at a very nice discount because of bad news or bad earnings. And so on paper, this might seem like a great option for me. And so I actually thought Macys was a great opportunity for the same way. The difference is that Macys has been falling for a long time and has stabilized. JCPenney has fallen 85% in the past couple years, and they're still hanging around the $1 delisting mark. If Macys was down by that level and there was a threat of it potentially delisting, I would go nowhere near it. But Macys is up around $15 right now, and you kind of have that safe space right now. Also, something I look at for a long-term position is the overall stability of the stock price over the history of the company. And so when I throw up the chart for JCPenney over its history, you can see the ridiculous moves that it's made in the past. And while this kind of looks bad for a stable long-term play, this kind of shows me that it has the potential to restructure, as they've done it a couple times already. In the early 2000s, early to mid 2000s, JCPenney struggled a lot, and they sold off some of their assets and they kind of rebranded and they recovered, as you can see by the stock price. And so while they've been doing very poorly for the past couple years, they've started to try to rebrand and try to survive in this online dominated area. And so they're not giving up yet. They can easily just kind of pull the plug and say, you know what, we're not going to make it. But I really like the fact that they're actually trying to stay alive. Do I think it's going to be possible? Do I think they're going to thrive? I don't really think so, but I like the fact that the CEO is still working hard to try to right this ship. Overall, I think if you're not taking a position in the leaders in the retail space, I would say stay away from it. So I kind of sound like a hypocrite for saying that after taking a position in Macys, but if you want the full explanation on why I took the position in Macys, you can watch it in my portfolio video that I made last week, which I'll throw up right now. But kind of the TLDR is, I like the fact that it's built a very nice support where it's really easy to cut losses. Also, the dividend is very attractive. I don't really see anything like that on JCPenney, so taking a position in JCPenney seems very risky at this point. Obviously, since it's fallen so far, there's a lot of potential for it to recover. However, what I see on the fundamentals based off of the increasing debt, the not profitable aspect of the company, decreasing in revenue for the past couple years, there's not a lot of reasons why I would be confident in this company. When you have something that's fallen so far, you can definitely get a news event that pushes it higher, but I don't think it's going to stay for very long. So for me, a long-term position in JCPenney is kind of a horrible idea. Short term, sure, you could probably make some money off of this big news event from today being down 10%. Maybe you'll get a bounce in the next couple days. However, I don't think there's anything that I see on the charts that makes me say, you know what, I can see why someone would maybe take a position in here. The reason I brought this up today was I was going through the list of the top stocks on Robinhood, and I was kind of surprised at how many people own JCPenney. It's not a very popular name like something like Macys, Target, stuff like that. And so I'm not sure if people are getting it as their free stock on Robinhood or if it's something that they're actively seeking out and taking a position in. So it's kind of one of those mysteries. The fact that I can see how many people are owning the stock on Robinhood makes me kind of question the ideas that people are thinking about while taking these positions. If it's that all of these people were given the stock and they didn't really have a decision in it, I'm okay with that. But if 25,000 people actively went out and said, I want to invest in JCPenney, I'd kind of be worried about what they're thinking about. But let me know what you think about JCPenney. Let me know what you think about department stores overall. Do you still think that my Macys position is a horrible idea, or do you kind of see the risk involved with taking a position in something like this? The reason that I've taken a position in Macys is I like the company overall, the brand, the dividend, also the fact that it's a very small position in my account. So I don't stress out when it goes up 5% yesterday morning and then it's down 3% today. So it's kind of a small part of my position, but it's kind of I believe it'll go up in the next couple years, and I'm putting my money where my mouth is. And I would not do that with JCPenney. So let me know what you think about these two stocks. Let me know what stocks you guys are watching at the beginning of this year. Thanks for watching this episode of Robinhood Top Stocks, and I'll see you in the next video.